Okay, you can now activate my camera.
Oh, Mr. Joseph, please activate his camera,
Activate
please.
camera.
I'm on it. I'm on it.
Okay. Okay, while we are waiting for the camera, let us enter through a discussion on discipline. The forex trading as a business. Forex trading as a business involves forex trading as a business involves discipline, so much discipline, not just play. It involves so much discipline. That is forex trading for you. It involves so much discipline, and it
So,
begins
Mr.
with
Harry,
you
can you speak up a little
as an
so that we
individual.
can hear?
Eh?
Can you speak
You
up a
said?
little? Can you
Okay,
speak
okay,
up a
okay,
little? Yes, sir.
okay, okay.
I think it's better now.
Okay. So, like I was saying, forex trading as a business involves discipline, and the discipline is from the trader, the person who wants to go into the market to make money. The discipline begins with you. There's supposed not to be any element of emotion, not at all, attached to the trading. For instance, if somebody is rash, if somebody is not comported, is not composed, and you are selling things to people in the market, you know what that means. You can give your goods to somebody and the person has not paid, and yet you think the person has paid. It is the same thing with forex trading. Now, first thing, when we are learning the concept of discipline in trading, we begin by giving assignments to people. And one of the assignments we give to people is that go and read the book called Alchemy. Alchemy. Go and read it by yourself and practice what you read inside it. When you are through with that, you will know what it means to be disciplined. There are people, when they wake up in the morning, if they are Christians, they are Muslim, whatever religion, they don't even remember to pray. They just get up and start beating and going anywhere. There are people, when they wake up in the morning, they don't know how to dress their own bed before they get up. They will leave the bed just like that and go. I bet it doesn't matter. Don't be me when I come and dress. Those are acts of indiscipline. Those small things, they accumulate to become very big in a person's life, that even when you see very important things, you just neglect them. And so those things affect the market when you are a trader. So for you to be a very good trader and a professional, you need to learn the act of discipline. Why am I sharing that? Because tonight, by the grace of God, as we want to trade here now, you can see my chart now. Are you seeing my chart? Are you posting the chart?
Yes,
Yes,
yes, we
sir.
can
Yes,
see
yes,
that.
sir.
Okay, fine. So we want to,
Yes,
you
sir.
can see that is plain. There's nothing on it. Uh-huh. So we want to trade with this chart. We want to trade with it tonight. Now, I don't know what will happen is this. I had wanted you people to, I don't know how your areas are there, but I had wanted everybody to also go into open up their charts before, so that as I begin to place my trade, then I will tell you go to Euro USD. Let us open to Euro USD, or I can even open to another stuff. But let us open to Euro USD, then we look at it. For instance, we can look at any time frame. Like this time frame here, now this is 5 minutes time frame. That is to say, every candle that is formed in this market is 5 minutes. We can change it to any time frame that I want to trade. But like I told you yesterday, if you want to do a daily trade, you will trade 1 hour, 30 minutes, 15 minutes, or 5 minutes. These are the 4 that you can trade. The people who trade 4 hours daily, weekly and monthly, they are people who are trading what we call position trading. Even those who trade swing trades, those ones will not be able to attend to them here. But when you have registered with XNS and we have put you into a group, we will begin to teach you all those things. How do we trade swing trading? How do we trade position trading? And how do we do intraday trading? All those ones will let you know. Even the real basic concepts of entry and exit of the market, we will also bring them to pass to play at that time, because we'll be training practically together. Like as I open my chart, you will also open your chart wherever you are, and we look at it from the boardroom, because that won't be on Telegram that time. So the people, that's why we have been encouraging you to go and read, to go and open your account with the link that is sent to everyone. Having said that, now we look at the chart tonight. On this chart, like I said, is Euro USD. The Euro USD is telling us that 1 euro is selling for 1.13510, for instance. At the point it is now, for instance, now when you look at the red leg, that first one that is up, you find that the price is at 1.13491. Then the one at the bottom is at 1.13457. So the market is fluctuating between these 2 points. That's what the market is telling us. Now, if I want to trade this market, the question is, how do I trade it? When you look at the position where those 2 lines are now, that is the regulator of the market, where you see where it is now, you find that the first line that came on the left-hand side, that went up and came down, it had gotten to almost the same level. Are you people seeing it there? Hello? Are you people seeing it there?
Yes.
You will see that at this point, at this particular point, let me bring something so that we can do it together somehow there. Let me see how I can bring some things into the market for you people. Okay, let me bring this into it. Okay, you are seeing this new line that I brought in. So are you posting the new line? This third line that I brought in, so this one that I brought in, so are you posting it? This one that I am moving.
Yes.
You are seeing it now, eh? Okay. I just brought it out now. Now what I am saying is that when the place I put the line, so you will find that it's equivalent to this other side that was formed initially before the market went up. And it has come down to that point already. And as at this time, and as at this time, the market is unable to break below it. You don't hear me?
We can hear you. Continue.
Okay. Now, what I'm saying is that when you get to this point, you find that at this particular point, the market couldn't break below that line that I brought into the market just now. It couldn't break below it. Now, in as much as it couldn't break below it, the meaning is that the market, there are buyers in that place who are resisting, who are placed a support that the price of the market must not go below that. So I have understood that one as a trader, and I will not take my position. I said, okay, since it couldn't break below it, it means that I can place a trade within this place. Now, how do I know that I can place a trade? When you look at the candles that are formed, the first candle that came, that red candle that first of all came, let me also bring another thing so that I can show you from there. Okay. Okay, are you seeing this? Are you seeing this arrow that I brought in?
Yes,
I
yes.
hope people are seeing the arrow that I brought in. Okay.
Yes,
When you
we
look
can
at
see.
Yes,
where
I'm
I
seeing
placed
it.
the arrow now, there is one candle that was found in that place. There was one candle that was found in that place. That candle, as it came down, the buyers pushed it up, and it went to form what we call a tail bar. What we call a tail bar. Now, this tail bar means that the whole candle was pushed up and it remained just a very small head, a very small body of the candle on top of that candle. That is a candle called tail bar. And so if I use what we call candlestick patterns to judge the market, I will now know that there is a buy force at that particular point, and I can place my trade to buy up from that point. And so I will look at it and say, okay, I can buy from this market. So I will now look at it, okay, should I just buy immediately? If I should buy immediately, then I will open my trade to that effect, okay, that I want to buy immediately. But if I don't want to buy immediately, I will now wait to see whether I should place type of orders. There are things called orders. There are things we call instant order. That's when you are buying instantly. Just like when you go to a store, you say, Madam, how much they said this thing? Say na 5 naira. So yeah, give me, take your money. That is called instant buying. But when you go to the store and you tell the buyer, the seller, he say, how much do you sell this one? He says 5 naira. They not they pay 4 naira. I say no. It's okay. I go come back again. That one you are doing is called is called a stop order. A stop order, what we call a limited either buy or sell, or stop buy or stop sell. That is the meaning. So they are called orders. Now in this case, if I want to place order, I will now say, okay, I will allow the market to move. For instance, now the market, the down leg is at 1.13427. Then the upper leg is at 1.13491. And like I taught you yesterday, you will now bring your book and your biro. Then I will now write that the down leg is on this and the upper leg is on this. I am journaling now, jotting down my trade. Then I will now say, I want to buy at 1.13457. 1.13457. That is what I want to buy. I will now put it down. So what I will now do is that I will wait for the market patiently till it gets to 1.13457. So the concept of discipline has come in. If I am not disciplined enough, I will just put the market instantly. I will just place a buy instantly, and it can go against me. But I want to also study something first to know whether what I have analyzed in the market is true. What I have analyzed in the market is true. That is why I have to wait to see that, let me buy the market at 1.13457. The process of checking the market through to know where to buy, to know where to leave the market, to get my profit and leave the market, is what we call market analysis. Is what we call forex analysis. You analyze it. Where do I buy? And how much should I buy? That is the analysis. So having written down the place where I want to buy, I will now say, how much do I need to risk in this market? If no matter how bad it is, if I lose so much, I should lose $10. I will write it down. Then if I'm losing $10, if the market goes in my favor, how much should I gain? I will now say, I want to gain $30 as my gain. And what is my lot size? My lot size should be 0.02, depending on the money that I have in the market, depending on the amount that I have in my account, in my wallet. So in today's market, that's why I say we want to trade. Today is a weekend. We are still, that's we beginning a new week, and the hour of trading has not come. Before the market will open today, it will be by 11 p.m. 11 p.m. However, now let me show you this. I want to open a trade
Yes,
now.
sir.
Are you hearing
We are
me?
with you.
Okay. Okay, good. Now I want to place a trade now. So I will take something like this. Are you people seeing it from there? What I put in the market, so are you people seeing it? On top of the chart, you are
Yes, sir.
seeing something there. Are you seeing anything there?
Yes, sir.
Are you seeing anything there? You will see that to my left, I have 1.1345 raised to power 7. Then on the right side, I have 1.1349 raised to power 1, which was what I read to you, which I've already written down. Now that I've placed this one here, I want to ask
Yes.
myself, what am I trading? Yes. What am I trading? Am I trading a stop order? Am I trading a buy limit? Am I trading a sell limit? I will now look at it. If I'm not trading those ones, should I wait till when the market moves to where I will buy before I buy? Because it's a buy market, like I told you. I want to buy the market. I'm not going short on the market. I'm going long on the market, which means I'm predicting by my analysis that the market will go up. The price of the market will go up. The price of this particular asset, Euro USD, will go up. That is what I've just analyzed. So I want to buy. I'm now looking forward to a position of buying and not selling. And the reason why I'm doing all these ones is because of these factors. I look at the what is formed here. What is formed here is that what we call double
Open your
bottom.
camera.
What we call double bottom is a chart pattern known as double bottom. The double bottom is that the leg that was formed initially when the market went up and it came down again, it got to that leg. It has gotten to that leg and it couldn't break below it, which means the market will go up again before it will come down. So I want to buy. Those are the convictions that I have. Those are the convictions that I have that want to make me to do what? To buy in that market. Now, like I said, I can't buy now because the market is not open. When you look at top of top of the screen, you will find that the numbers there, they are not colored. They are just white, blood, which means that the market is not open. So we can't trade it like that. Are you following? Okay. Now, having looked at this chart like that, let's take to another place. Let me take us to another chart now. Let's take to another chart where I will also explain to you. Let's go to another chart. Okay. Now, here comes another chart. In this chart, I have already fixed my indicators on it. Like I told you yesterday, I trade with the 200 moving average and the 20 moving average. Those are the moving averages, simple moving averages that I use in my trading. If I want to place indicators, like the first one I showed you, that is called price action. I use price action. I didn't put any indicator. I didn't put anything on it. I didn't even put a trend line. I only used direct price action to analyze the market, how the market is moving. But in this case, I have already put indicators. And now, these indicators that I put, in this case now we are dealing with pound sterling, which is GPB USD. GPB USD, pound sterling stroke, and dollar. That is US dollar. That's what we want to deal with on this one now. And in this market, you find that the stock is under both the 200 and the 20 moving averages. In as much as the stock is under them, the information that it has given me is that this market is a sell market. because both of them are under the 200 and the 20 moving averages. It shows that the market is what? Is a selling market. You can see the simple analysis I've been able to get by virtue of the indicator that are there. And so when I want to trade it now, look at what I want to do. Like I did before, I want to do something now. If I want to trade this market, I will now go here. I will now come here to come and take some information. Okay, let me now take let me take a trend line that I can manipulate. Okay.
Please
So
question and
this
answer.
is a trend line normally. So what I want to do now is that you can see me putting a trend line under this.
I'll open your camera.
Eh? I hope you are hearing me. Okay. Now I have put a trend line there now. Look at the trend line. I drew it from the end of the trade to this particular point where I put it now. And I want to also take another trend line. I'm going back again. I'm taking another trend line. Okay. I have put it there. Then I will now draw it to the same point. To the same point now. Good. You can see that I have marked out the point of the trade. What have I done? I have looked at the trade when it ended on Friday. As it traded throughout Friday till when it stopped, I have marked it out. And I found that the trade was on a sell from all indications. So what I want to do now is this. I will push this one up a bit. This one, I'll push it up a bit so that you know what we are doing. So you now found that both the trend line that I put and the 200 moving average, the 20 moving average, the stock is below all of them. The stock is below all of them. This shows to me that this trade is going for a sell. This shows to me that the trade is going for what? For a sell. And in as much as it is going for a sell, what do? I will now look for a position to sell. However, the stock has already moved down. Below the 20 moving average to some reasonable extent, which is far away. We call it far away. It's a bit far away from the 20 moving average. I will now wait whether the market will come back to the 20 moving average. If it comes back to the place of the 20 moving average and is unable to break it up, then I will now take a buy at that point. Now let me show you something. Let me show you something in the market. You can see one arrow that I've pushed in again now. So I want to check something. Where is the moving average? Where is the 20 moving average? The 20 moving average is at 1.34681. Are you seeing it on your chart? Are you seeing it on your chart?
Yes.
Good. That black line that I put there, so good. You can see it. That black line is where I want to sell. I am saying that if the market moves back to that place, that is when I will sell the market. If it doesn't come back, I will wait. That is how the trade is. If it doesn't come back, I will wait till when another opportunity will come for me to do what? To sell. That is the market. I will not just, hey, it's going for a sale, then let me just put it. No, I will not place a trade because I see that it's going for a sale. There is a particular place where I need to sell. It's not everywhere in the market that the market has gone to that I need to sell. It's not everywhere that the market goes to that I need to buy. There is a place what called position. There is a position that the market will be, and it will be good for me to do what? To sell. Just like when you buy a product in your store and you say, okay, I buy this thing for 10,000, but I wait so long. The prices are rising. I'm waiting when it rises to 12,000 before I will sell. That's exactly what I am doing. Or I will wait till when the market falls down to 8,000 before I will go to market to go and buy. That is exactly what I am doing. So you wait patiently to know exactly where to buy and where to sell. Where to buy and where to sell. So that is how it is. So you can see as I am bringing in all this, you can see as I am bringing in all these things now into the chart. All these things are inside the MetaTrader 4 or MetaTrader 5 that I am using to do the trading for you. So what you do is that in MetaTrader 5 of some of brokers may not carry the chart like this for you. It may not carry the chart like this for you. Rather, it will only carry it will carry just are you seeing this thing that's on the screen now?
Yes.
Hello.
Yes, sir. Yes. We
Yes.
are listening.
Yes.
We are with you, sir.
Yeah, are you seeing what is on the chart now?
Yes,
Yes.
sir.
Yes, sir.
Look at your look.
Please,
That thing you are seeing now is
please, sir.
I am preparing to execute a market now. When you look at the top, you see instant execution. Am I going to buy? Am I going to sell immediately? Am I going to buy immediately? That is what it means. But if I am not buying or selling immediately, I will touch the instant execution. Then other items will come. On top of that one, you have instant execution, you have buy limit, you have sell limit, you have buy stop, then you have sell stop. All these ones are trading opportunity, trading options that are presented to you by the market, and it's now left for you to take one out of them. For instance, if I want to do, I've told you I want to sell in that place, but in that place wherein I want to sell, so for the fact that the market has not gotten to there, I can place what you call a sell limit. So I will touch a sell limit. And once I place the sell limit, what will happen is that I have to put my figure. I have to put my figure. I have to put my figure. And from the figure that I saw there, it is now 1.3457. Then I say place, and I place my trade. Okay, they are telling me say market is closed. I hope you are seeing it there. They are telling me market is closed. I can't execute a trade. This is MetaTrader 4. That's why it is like this. But when it is MetaTrader 5, this is not how it will be. It will place the two options for you. Then you cannot take one, either sell or buy. But in this case, the opportunity is there for you. I can also take all those other options depending on how I want to do it. But it's not a large trade. Those of us who have registered, who have opened our account with Xness, you will be placed in a group wherein we are going to mentor you. We are going to trade together when the market has opened, maybe as from tomorrow by the grace of God. When the market has opened and you have funded your account, then we open the market together and we trade. It won't be in the night like this. It can also be in the night, but the night will not be too good. It will be during the day. So admin we reach out to us on how we are going to go about that when they have made the schedule. So it is important that you fund your account, open your account, fund it, and be ready for trading. I will hold you by your hand. Just as I'm analyzing it, I will analyze it and I will tell you this is where you are placing your trade. This is the kind of trade you are putting. And if I know, I will also ask you before we begin the trade to know the amount with which you have funded your account. And I will tell you the right lot size for you to use. The right lot size for you to use. So I remove this one from my chart. Now I say hide. So now that I've done that, I can now move again. Okay, let me go back to my chart. Let me go back to my chart. So that is how to do, that's how to trade. That is the process of trading. Now, I've taught you two things tonight. One of them is discipline, how you needed to be patient with yourself, comport yourself, be confident about what you are doing. Then you wait for the trade to get to where you are able to maximize your profit before you take the trade. That is the first step. And I gave you a recommendation. I recommended a book for you. Go and read Alchemy. You will get those information from there. Now we now went into the trading proper. And in going into the trading proper, I have been able to let you know that first thing, emotion must not play in the market. If you are angry, don't trade. If you are quarrel, if anybody quarrels with you, don't trade. Don't trade. Don't transfer your aggression into the market. You are not the owner, or else you will lose all your money. So all those ones, they come with discipline, which also called psychology of the market. Then the next thing, like I shared with us yesterday, money management. How much am I ready to lose? You must put that money into consideration. Don't always be thinking, as I enter the market, I'll just win all the money. No. How much am I? Peradventure, the market goes against me. Like this analysis that I gave now. What if the market goes up beyond the 20 moving average, beyond the 200 moving average? What will happen to me? Now, that one will take me to where I want to put my stop loss in this market now. So listen again. I'm going back to the analysis I gave you before. Okay, no. Let me take this. Okay. Now, I said I will buy this market. I will sell this market when the market gets to good. When the market gets to 1.34668, within that range, that's where I'm going to buy. I'm going to sell the market. Then where do I now put my stop loss? This particular candle that was formed, wherein I'm going to put my what's it called, my trade, so that I'm going to take and I'm going to do my entry. You look at the candle ended. Let me show you. The candle ended at 1.34762. 1.34762. That's where the candle ends. That is where I am going to put my stop loss. That is the place I'm going to put my stop loss. Now, when I put my stop loss there, I will now trade. If the market crosses, is able to break the 20 moving average down, it should only take that small portion of the money that I put there. And I'm not just putting it there. I will calculate it based on pips. The number of pips will also determine where I'm going to put it, but it must be under the 20 moving average. It must be under the 20 moving average. It must not go beyond that, so that I don't lose so much money if the market goes against me. And if peradventure this particular trade goes against me, I can even close and say, let me go and relax today. The market is not favorable. Let me leave. I will not say, hey, this is my money that's lost. I must win it back. No. You don't have a revenge mind towards the market. You are not the owner. Your $200, your $1,000, even your $20,000 is insignificant in the market. Your $100,000 is insignificant in the market. The people who put their money down with which this market is being run, who are called hedge funds, the central banks of all the entire world together, their money is there, and they are in billions of dollars. They are in billions of dollars. So that is the thing. So when you are hearing nations that nations have reserve, nations have these ones, these are the places they put them. They can go and buy gold and leave the money there. Then the gold will be traded in the market, and gains will be entering into it. That is how the market moves. So in order for me not to lose my money, I told you the first law of the market is protect your capital. Protect. So this is the way to protect my capital, by putting my stop loss in a place that it will not cost me that much. Now, having said that, how do I know where to take my profits? I've told you where to put your stop loss. How do I know where to take my profits? When you look at the market, you find that when it came down before, it got to 1.34150. That was where the market got to. Now, as it is coming down, is it going to break below that place? I don't know yet. Or is it going to stop there? I don't know yet. So what I do is that I will now bring my cursor down and say, no, since it got to that place, let me take my profit before that end point. Because when you look at the candle body was pushed up a little. The candle was pushed up a little. So where the candle actually ended, it was on an ordinary rope. It was not the body of the candle. It was just a tail. It's a tail. So I will not rely on that tail. So I will take it to 1.34235. I said that's where I'm going to put my take profit. So you can see the difference between where you lost and where you gain. You can see the big difference between them. That is how to calculate your take profit, and that's how to calculate your stop loss when you are trading. That is how to do it. Now, having said that, you've known how to place your trade, you've known how to you have to take your place your stop loss, and how to place your take profit. Now, why do you need to put your take profit and put your stop loss? It is not good to look at the chart all day. It is not a good idea that when you have placed your trade, you begin to watch it and be panicking along with it. No. Once you are confident that, well, I placed my trade here, if it moves for me, let me gain this. If it moves against me, the market will take me out, but with small money. I will not lose much. Good. Once you have understood this concept, you can place your trade, even close your laptop and go to whatever thing you want to do. You have your time to yourself. While you are doing that thing, after the time you are placed there, for instance, in 5 minutes time frames, the market will reverse back after 20 minutes. After 20 minutes, the market, that is when the market need to move to wherever place you are putting your take profit or your stop loss. It will be 20 minutes. So after about 20 minutes of you doing any other thing, you can come back to say, let me even go and check down my trade. Or about 30 minutes at most, you just do it. You come back to the market, you look at it, maybe the market has given you your profit already. And if you want to place another trade, you can ask, okay, let me analyze again and place another trade. But if you are not placing another one, say, I bet this one, when I went to the reach, I close my market off your system, you can't drop it, you can't play football, you can't play snooker, you can't do gym, you can go to swim pool and what have you to enjoy yourself. The whole day belongs to you. That is the beauty of forex trading. It's time leveraging. You have enough time to play with, to do other things for yourself. You can be trading and you are still attending your business. You can be trading and still be attending to your work. You can be trading and still be attending to your apprenticeship, because it gives you the time, ample of time, to do whatever thing you want to do for yourself, even while you are making money from the market. That is the beauty. And you don't need a store. Like I mentioned towards the first day, you don't need any other thing. All you need is your smartphone and data. Then you register, you open an account with a broker, and in our case, we have told you our broker is Xness. Everybody go there, because from tomorrow, all the people that have opened the account, admin is going to put them together in a group, separate group, and from there we'll be trading together and be making profit in the market daily by the grace of God. That is where we are. So if you have not opened your account, you are doing yourself a disservice, a very big disservice, because as from tomorrow, you are not going to see this free stuff again. You will not see it again. Now, having said all these ones, let's now you can see me, I'm taking off all the things that I put in the market. All of them, I'm taking them away now. I'm taking them away now. I've taken all of them away from the market. So the market is now open, left for with all the other items that are there. I hope you are seeing me on your own end as I am doing all those things, as I am putting them. But if you are not
Yes.
seeing me, if you are in
Yes,
our
sir.
group, if you are in our group, like I said, as from tomorrow, when in our group, I will show you how you are going to download your MetaTrader 4, MetaTrader 5 to be doing analysis. I will show you. We'll be doing analysis together. Thereafter, we place our trades together. That's how we are going to do it. So be rest assured. It's just unfortunate that today's the beginning of the week and market has not opened. If do not, we will be saying trade moving already, and how we are gaining our profit. By now, we have gotten something out of the market already. That is the thing. And like I've told you people, I normally trade New York section, which is also American section. That is where the market moves best. The reason is because during that time, many people are buying, many people are selling. And you know it is with population area the market moves. It is the same thing with the forex market. It is when people are buying, it is when they are doing so much foreign exchange. That is where the market moves. And many foreign exchange usually takes place during the New York section. Though market also move in the Asia section and in the London section, but not as much as in the New York section. So I relax myself, I reserve my energy, I will do my analysis ready, open my chart. Once it gets to 12, gone, I will now look at the chart properly. Okay, where is the market going? I will now look at it. Now, having said that, let me show us one thing quickly. The time is running. Time is running. Okay. When you look at the market, you see that I folded my chart together. Can you see it like that?
Yes.
I hope you are seeing my
Yes, sir.
chart now. Yes, I folded
Yes.
it together.
Yes.
When you look at the chart, now. You find that there are places where the market didn't move up, neither did it move down. Are you seeing those places?
Go ahead,
Are
sir.
you
We
seeing
can
those
hear you.
places?
Yes, yes, sir.
Those places where there is no identifiable movement of either up or down, those are consolidation areas. Those are the distribution areas where the market did not move. So you don't trade at that particular time. Rather, you wait for it. You wait for it. That is what I want to let you know. You don't trade at that particular time. You wait for the market to see whether the market is going to go up or is going to go down. And like I analyzed to you, when you see that it is below these indicators, you can be sure that the market will go down. But it now left for you to know a place where you are going to place your trade. That is the thing. So that's what I just want to point out to you. Now let's go back again to our Euro USD chart. Euro USD chart. Okay. In this chart, you find in this place, let me bring it like this. Good. Let me bring some stuff here so that you understand what we are talking. Let me mark out something for you here. Okay, let me take. Okay. You can see that I brought in another trend line. I'm still going to bring. I'm still going back. Good. This place that I marked out in the market here, you are seeing. So this place that I marked out in this market is what we call the distribution area, or what we call the consolidation area. The market didn't show that it will go up, neither it will go down. But when it has finished, it now came down and went up straight. It came down and went up straight. Like I was sharing with you, when you put this your trend line on it like this, and the market couldn't break below it, This is direct pure price action. If the market couldn't go below it like this, it shows that the buyers are there and the power of the buyers is much at that market, and that is why they pushed up the market. But when they got up to this point, let me show us again. When they got up to this point, good. When he got up to this point, he couldn't cross it again.
I can't see the chart again. No.
It came down. You are not seeing the chart again?
Yes, sir. We are not seeing
Is it like that for everybody? Only you? Is
No,
it
we can
everybody
see
or
you.
only you?
But I'm
It
seeing
should
it
be your
though.
system now. You are seeing
Yes,
it?
we
I
can
can see
see
it.
Eh?
it. Yes, yes.
Oh yeah, check your system properly. Now, when you look at the height where I put that trade line, you find that the market couldn't break beyond that line again. The sellers are there saying that the price must not rise beyond that one. So you will now know, okay, the sellers didn't agree for it to go beyond that, which means there are sellers. That becomes your what? Your resistance point. That is your resistance now. At that point, what do? You now look for a sell immediately. So, okay, this market couldn't break beyond this. In the midst of that very big candle, it couldn't go. Because normally, when a giant, an elephant candle is formed, there is the tendency of 70% follow through. What we call follow through, that is that the market will move in that direction where the big candle is formed. That is the meaning. Because like I told you yesterday, so much money is used to form that candle. So we are looking at it that the market is supposed to move up, and it is 70% follow through rate. But in as much as it couldn't form another green candle, rather it is a red candle that was formed. It shows that there are sellers there in the market who are saying the price must not go beyond this. And so immediately you see that red candle, you know that the price couldn't move. So you now look for a sell opportunity. So that is the meaning of the market. That's how the market moves. So you can now see that I am trading both support and resistance at the same. I'm trading it on the market using price action. There are no anything added to the market. It's only me analyzing it based on these ones. The reason why I'm putting these trade lines so that you can identify the points I am talking about. That is the thing. Now, when the market moved, it now broke through the point, the first point where I put the trend line before. It broke through it down. When it broke through it down, the buyers then now pushed the market up. They refused that the market should go below that place. They now pushed it down again. And when you look at it, you find that there is a V that was formed in that place. The V upside down. Are you seeing it like that? Are you seeing it on your screen? You see that there
Yes,
is
sir.
Yes, sir. We are seeing it.
there is a V that was formed there. No problem. Maybe you do not understand, don't note it. You will ask questions about it, and I will explain to you in the course of answering your questions. So that is the thing. So I'm trying to round up now. Immediately. Then you ask your questions. So when it breaks below the point, the former point, we now say it has broken the support. The former support now it has broken it, and that former support becomes a resistance point. That former support becomes what? A resistance point. But in this trade, you find that when the trade started to move up, it moved beyond that place again, and it went up straight to his former position up. But when he got to that former position, he couldn't still break it. It came down a little before he broke up a little and came down again to where we want to buy again. That is the reason why I'm telling you I am looking for a buy in this Euro USD. But in the case of GBP USD, I am looking for a sell. That is how the market works. Why some assets are going for sale, some other assets are going for buy. So it now depends on how how much knowledge of the market you know, how skillful you are about analyzing the market before you now say, yes, this is where this one is going and this is where this particular asset is going. That is what we are saying. I hope we are following. Okay, I want to round up here tonight. The market didn't allow us to trade because it's closed. So, but as from tomorrow, we will trade live market for those of us who have opened our account with the link that was sent to us to register with XNext. So, happy shares to those people who are going to benefit maximally as from tomorrow. So we close here. We'll stop here now so that you can bring your questions and we attend to them. Admin, over to you. Admin, I said over to you. I've rounded up on this part first. Let them ask their questions.
All right. Thank you. All right. Thank you so much, sir, for this wonderful training. Please hold on. Please, those of you that are raising your hand, just hold on. You will take the question in this order. Fear God, John, you can go ahead with your question. You raised your hand. And Dabere, get ready. After Fear God, it will be your turn. Then comes OG Jude, Christopher, Adedeji, Divine, in that order. So over to you, Fear God. Go ahead with your question.
Fear God, we are listening. Okay, no problem.
Okay. If Fear God is not ready, Adedeji, go ahead with your question.
Adedeji,
Hello.
is he echoing? You are saying, why is he echoing? Is he echoing on your own end?
Okay, yes, it is
Do you have
echoing from GONET
any
Forex.
question? I don't have any question.
Okay, Divine, you raised your hand.
Yes, sir.
You can go ahead.
You said what?
Okay. My question is, how do I get this indicator?
How do you get what?
These indicators.
To get indicators, you bring them from. I taught you that one. Was it not yesterday? When you look at me as there was a play when I open my chart by the side of my laptop. There is the place where I take those things from. There's also an icon there. Is where you can take your indicators if you want to trade with indicators. But it's not like I said, by the grace of God, when those of you who have already opened your account, when we are going to trade, we will bring you through that process. You will download your MetaTrader 4, MetaTrader 5, then I will teach you how to get all those things fixed into your chart. Okay, any other question?
Okay. Yes. Divine, you can go ahead with your question.
No, I've already asked now.
Okay, Samuel, you can go ahead with your question.
Okay, good evening, everyone. Good evening, Admin. Good evening, Mr. Harrison. Thank you for the session.
Welcome.
So we've been talking about buy and sell, buy and sell. So it's obvious that when you're from, what happened exactly when you are selling? Like when you're buying, money is being added to your.
What happens exactly when you are selling?
Hello.
What happens exactly when you are selling?
When you are selling,
When you are selling, the market goes, it means that that particular asset is going down in price. That particular asset is going down in price. So your stock will be tending downward, which we call the downtrending, the downward trend. Your stock will be going down. That particular asset will be going down in price, will be lowering in price. Just like, for instance, now, if you are, maybe you say, let's assume, for instance, now that you buy groundnut oil, 25 liters, about 100 of them. You bought them when they were, when they were 5,000 naira. And the price was not rising. Are you listening to me? The price was not rising. It now rose to about 25,000. And all of a sudden, you now found that something that got to 25 is trying to get to 24 and it's trying to get to 23. What do? You say, make I sell, make I get my money, come out so that we still get some gain. That is how the market is. If an asset is rising in price, it will get to where the sellers in the market will say, no, enough of this price, we want to sell now, and they will sell. When they are selling, the price of that asset will be going down and the trend will be coming down. That is when what happens when we sell in the market. So you have to identify where the market wants to come down, like that, when the price of that asset wants to come down, and you sell along with it so that you get gain. In the market, whether you buy or whether you sell, you make gain in either ways.
okay.
Samuel, are you okay?
Yes, sir.
Hello. Any other question?
Ask your questions. Anywhere you are not clear, ask. We'll explain to you.
Sir, please, can you put the chat back on? I'll have the question on the chat.
You want to see the chart again?
Yes, sir.
That's not a question. What, Mr. Samuel?
My
Like
question is from the chat.
Can you hear me? Hello.
Yes, I can hear you.
Okay. The trainer is trying to attend to you.
So let me share it again, so that let me bring out the chart again so that you will see it. So that you will see it. Now you can see the chart now, right?
Yes, sir.
Okay. So what you ask your question now?
Okay. So the previous chart, okay, on this chart this chart is the chart you said you want to buy using the price action.
Yes.
Then the comma chart, you use the indicators, moving indicators, and you said you want it.
Okay, that's the one you want, eh?
No, I want to know the difference between the chart that makes this one a buy chart and the other chart a sell chart with respect to price action and the moving average.
Now listen, I told you when I came in, when I aim, you look at this line that is here, look at this line that is moving. Are you seeing this line?
Yes, sir.
Are you seeing it? Now,
Yes.
you can see that I brought in this line and I use it to close these two legs. Are you seeing the legs there?
Yes, sir.
I am telling you that in as much as this leg that is coming down again couldn't break through the other leg, it shows that there are buyers there. That place is called stop. That is called, support. It's a support level. It means the place is so strong that the sellers couldn't break below it. The people are saying the price is low, is enough now. It shouldn't go below this. That is what it means. And so they want to push the price up again. By analysis, I've seen it like that. So I am now saying, okay, this market is going up again. Oh, I need to buy. That is how my bias. When you are taking a decision either to buy up or sell, we call it bias, to get edge. That okay, this market I want it to favor me, and this is, let me take a decision on this. That decision you are taking is called bias in the market, and those are technical terms for the market. Now I now look at it like that and choose. I say, okay, this is my bias. I want to buy from this one. Now in the other case, this one now you see that the chart is an ordinary chart. So I'm using price action to do that one. In this case, this is now an indicator trading strategy. The other one is pure price action strategy. This one is indicator trading strategy. In this indicator trading strategy, I told you that when the stock couldn't break through the indicator, it shows that the price at that particular time will be going in the direction wherein the 20 moving average is going. For instance, the 20 moving average is under the 200 and the stock is under the 20 moving average, which shows the market is going downward, which is for sale. That is how I form my bias. In as much as the price couldn't break through the 20 and break through the 200, it's showing to me that the market is coming down and I need to sell. So that's how I am able to form my opinion of either buying or selling. I hope it's
All right,
clear.
thank you, sir. Mr. Christopher, go ahead with your question. Christopher, you can unmute your mic and go ahead with your question. Okay, while you are yet to do that, over to you, Ume. You can go ahead, unmute yourself and ask your question.
I'm listening to you.
Christopher, you are raising your hand. If you have a question, go ahead with it, please. Unmute yourself. Okay, I guess it's a mistake. You don't have any question. Ume, if you have a question, unmute yourself and go ahead. You are still raising your hand. Okay, Samuel, your last question, please. You can go ahead.
No, I don't have it. I don't have it.
Okay, in the absence of any other question, we are bringing today's class to a close. Thank you all for staying to the end of the class. Like our trainer rightfully said, if you haven't opened your SNS account with us, go ahead and do so. If you encounter any difficulty, reach out to us. And for our exclusive class, you can DM us and we'll add you to the class. Thank you all for being part of this class. Mr. Harrison, thank you. Adedeji, go ahead. All right, in the absence of any other questions, we bring today's class to a close. Thank you all for being part of this 3 days amazing free training. If you wish to become a pro, if you wish to strengthen your hand in forex trade, do where to DM us. We will guide you We will mentor you and ensure that you become a pro when it comes to forex trading. Thank you all, and God bless you. Good night.
Good night, everyone. I really do appreciate for today's class.